Welcome to the Deep Dive by Team Price Real Estate.
Glad to be here.
Today, we're jumping into a really crucial deep dive. We're looking at the Austin housing market, specifically as of July 8th, 2025.
That's right. And we've got some great detailed sources to work with.
We do. We have the Austin housing market mid-2025 snapshot, and also the Austin Daily Real Estate Briefing from Team Price Real Estate. Really fresh data. So our mission, for this deep dive is to unpack the most important nuggets of knowledge, the key insights from these reports. We want to give you a clear, concise understanding of today's Austin housing landscape.
Yeah, it makes sense of it all.
Exactly. We're going to explore the key indicators defining the current market, look at the recent Austin housing trends, and maybe even peek into the Austin housing forecast for price recovery. It's quite a bit to cover.
It is. And what's really interesting, I think, is how these sources give us such a granular, almost real-time view of the market dynamics.
Right.
So we'll be focusing on understanding not just, the numbers themselves, but what they actually mean for buyers, for sellers, anyone interested in Austin real estate right now.
Which raises that big question, doesn't it?
It does. What story do these figures really tell about demand, supply, pricing in what's usually one of the country's most dynamic cities, especially as it navigates this newer phase?
Okay, let's start with maybe the biggest piece right now. Inventory. That seems to be the headline.
Definitely.
The latest report shows active residential listings at 17,682. That's just 394 listings shy of the all-time high. That was just back on June 27th, 2025. So 18,076 was the high.
Why? That close?
Yeah. It feels like supply is really, really building up, doesn't it? What does this accumulation tell us?
It absolutely points to an imbalance, a persistent one.
Okay.
And if you connect this to the bigger picture, a huge chunk of these homes, well, they just aren't finding buyers quickly. It's not just about new builds either. It suggests maybe some homeowners who felt locked in by those lower rates are now listing, maybe reluctantly. It shows a shift in seller thinking.
That makes sense.
And get this, 57.1% of all active listings across the entire MLS, that's the multiple listing service, have had at least one price drop.
Over half. 57%.
Over half. That's a huge number. It
Yep.
really speaks volumes about the pressure.
Wow. That signals a pretty widespread need for sellers to adjust, doesn't it? Not just small tweaks. It's like an active adaptation.
Exactly.
And it's not just in a few spots, is it?
Yeah.
The sources mention cities like Georgetown, Pflugerville, Round Rock, seeing price reductions over 61%.
Yeah, even higher in some pockets.
So is this pricing fatigue, as they call it, happening everywhere equally? Or are some areas holding up better?
That's a great question. So while the trend is pretty broad-based,
Yeah.
Sellers across the metro are adjusting.
Mm-hmm.
The data does show some submarkets feel it more acutely. Why places like Georgetown or Pflugerville see those higher percentages often relates back to how fast they grew during the peak.
Oh, okay.
Right. More immediate competition among new listings, maybe a bigger pool of homes that were priced a bit too optimistically to start with.
So the market's just trying to find its footing there more obviously.
Precisely. It's trying to find that new equilibrium. And, while new listings, January to July, are actually down 3.6% from last year.
Which was already slower.
Right. 2024 was active but slower than the peak. But even being down slightly, that number, 30,411 new listings, it's still 15.3% above the 25-year average.
Still historically high then for new homes coming on.
Exactly. So new homes are still entering the market at an above-average pace, which just keeps adding to this high inventory we're seeing in today's Austin housing market.
Okay, so inventory's high, sellers are dropping prices. What about the buyers? What does that tell us about buyer activity?
This is where it gets really interesting.
Yeah, this is where we get the pulse, right?
Right.
The activity index. It's currently at 19.7%. That's down from 23.2% a year ago. So that's a 15.3% drop year over year. Given those numbers, why do you think buyers are so hesitant right now? Is it just the economy?
Well, that's the core of it, really. This erosion in buyer activity, even with prices adjusting. It points to a few things happening at once.
Okay.
Buyers are dealing with economic uncertainty, sure, but also those shifting affordability numbers driven by interest rates.
They're a big factor.
Oh, absolutely. And we see this clearly in the pending listings. They're down to 4,331 in July 2025 compared to 4,581 last July. That's a drop of about 5.5%.
Okay.
And year-to-date, the cumulative pending listings, down almost 16% year-over-year, and nearly 8% below the long-term average for this time of year.
So fewer homes actually going under contract.
Exactly. It suggests buyers are taking their time, maybe waiting for prices or rates to drop more, or just, reassessing things in this cautious climate.
Which brings us right to a key metric team price tracks closely. The new listing to pending ratio.
Yes, a crucial one.
It's currently at 0.50 for the month. Just to give that some context, the 25-year average is 0.81. That's a pretty big difference.
It's stark, isn't it?
It really is. What does that ratio truly mean for someone trying to buy or sell in the Austin housing market today?
It's critical for understanding market momentum or lack thereof. A ratio of 0.50 means for every 100 homes listed, only 50 are going under contract within the month.
Only half are getting absorbed.
Right. It strongly signals suppressed buyer urgency. The pace of activity just isn't enough to absorb the inventory we have.
Okay.
And looking bigger picture, year to date, there's a cumulative difference of 6,894. That means almost 7,000 more homes have been listed than have gone pending this year so far.
Wow.
That surplus is a primary driver pushing inventory up and, putting downward pressure on price stability in today's Austin housing market. It's a clear sign of reduced demand and excess supply.
It shows the market's really searching for that balance point.
It really is. It's not just cooling. It's actively trying to recalibrate where buyer expectations and seller realities can meet.
Let's talk prices then, because this is where, people feel it directly in their wallets, their equity.
Absolutely.
The median sold price in Austin, July 2025, is $465,000.
Okay.
That's down 15.45% or $85,000 from the peak. That was $550,000 back in May 2022.
A significant drop.
And the average sold price is also down 12.56%. That's $86,000 off its peak. It's now at $596,306. These aren't small adjustments.
No, they're not. These numbers confirm a substantial price correction from that 2022 peak.
Right.
And what's important to grasp is this isn't just a market cooling off slightly. It's a major recalibration. It's impacting homeowner equity in ways we haven't really seen in recent memory here.
Right.
Now, if we put this into the context of the Austin housing forecast, the long-term data gives us some perspective for recovery. The 25-year compound real estate appreciation rate for Austin is 5.1118%.
Okay, 5.118%.
That's not just an average. It's what money truly grows at over time in this market, historically. Yeah. And that's fundamental for thinking about recovery timelines, given Austin's underlying long-term appeal.
So let's run with that. If we make the assumption, and you said it's a big if, that this $465,000 median is the bottom.
Right, if we assume that's the floor.
How long would it realistically take for Austin to climb back, to recover that lost value and get back to the peak? And what could speed that up or slow it down?
Well, based solely on that 5.118% annual compound rate,
okay,
math suggests it would take about 43 months. So that puts us around January 2029 to get back to that peak value of roughly $549,630.
43 months, January 2029.
Yeah. But again, that projection assumes consistent compounding, no more big economic shocks, no major policy changes.
Which is a lot of assumptions.
Exactly. Big shifts in interest rates, a sudden boom in tech jobs, or the opposite, a broader downturn. Those could definitely change the timeline. It just highlights that while Austin's long-term fundamentals are likely still strong, the path back isn't necessarily a straight line up.
And it's also interesting, isn't it, that this price squeeze isn't hitting all homes the same way.
Very true.
The data shows homes in the bottom 25th percentile, the more affordable ones, have seen prices drop almost 5%.
Mm-hmm.
But the top 25th percentile saw much milder drops, like 0.31%. Why the big difference? What does that mean for different parts of the Austin housing market right now?
Yeah, that's a critical nuance. It strongly suggests the affordability tier is under way more pressure.
Okay.
And it's largely down to the combined hit of higher interest rates and just generally more sensitivity to monthly payments at that price point.
Right, the payment matters more proportionally.
Precisely. A small rate increase bumps the monthly payment much more dramatically on, say, a $400,000 home than on a $1 million home. Buyers in that more affordable segment are hit harder by financing costs.
So sellers have to cut prices more to meet them where they are.
Exactly. They have to make bigger adjustments to find a buyer who can make the numbers work. It tells us the cost of borrowing is acting like a major gatekeeper, especially for entry-level and mid-range buyers.
Yeah.
I talked to a family recently. A few years ago, they felt confident they could buy in that range. Now, even with prices down, the higher rates just blew up their expected monthly payment, pushed it way beyond what they'd planned.
That makes it really tangible. Okay, beyond listings and prices, sales volume. That gives us another angle on the health of today's Austin housing market.
A very important one.
We saw 2,528 closed sales reported for July so far. That brings the year-to-date total, January to July, to 17,576.
Okay.
That's down 6.4% from the same time last year. What does this ongoing dip in sales volume really tell us about the market's overall energy or efficiency?
Well, while that cumulative number, 17,576, is still actually 5.8% above the long-term average.
Okay, that's interesting.
It's crucial to remember that 2024 was already seen as a pretty slow year compared to the boom.
Right.
So this points to a persistent 2-year sales drag. The market's just operating at a much slower pace than its historical productivity would suggest.
Okay.
And when you put this in context,
Yeah.
like when we normalize those sales figures for population growth, and for the sheer number of realtors now active in Austin, the picture gets even clearer about market productivity, or maybe the lack thereof.
And yeah, when you normalize those numbers, it really changes the perspective, doesn't it?
It does.
Sales per 100,000 residents are down 8.6% year over year, and they're sitting almost 22% below the long-term average.
22% below average, despite population growth.
Yeah. And sales per 1,000 realtors, down a massive 25.7% from historical norms. Those aren't just small dips. It suggests a real challenge in connecting buyers with the available homes efficiently.
Exactly. This continued slide in sales productivity, even with Austin growing and more realtors than ever, it clearly reflects that deeply muted buyer engagement we've been talking about.
Right.
So a key question here is, how do all these trends together impact how we see overall market health? It's not just the raw numbers, but how they fit into the dynamics of this growing city.
And that's where Team Price Real Estate brings in those proprietary metrics, right?
Yes. They provide some excellent tools to synthesize all this.
The Market Health Index, MHI, and the Inventory Stress Index, ISI, these really help paint that comprehensive, real-time picture of Austin's market conditions.
And what's particularly telling, I think, is the MHI. It's 17.97%.
17.97.
Right. Which is way below the 30% threshold that usually marks a seller's market.
So clearly buyer's territory.
Unequivocally.
Yeah.
Firmly in buyer territory. And the ISI, the Inventory Stress Index, that remains really low at 5.35%, which indicates very little stress on the available inventory.
Low stress, plenty of options.
Exactly. Both indicators strongly reinforce that current conditions favor buyers. There's plentiful selection, much less urgency needed to act fast, which lines up perfectly with longer listing times, more price cuts, and that cautious buyer sentiment.
It means buyers have leverage, real leverage they haven't had in years here.
They certainly do.
So, wrapping this up, what's the main takeaway for you listening as of July 8, 2025?
Yeah, the big picture.
The Austin housing market remains squarely in buyer's territory. We're seeing near record high inventory, lagging pending sales, continued price corrections from the peak, and just overall muted buyer engagement. It really paints a picture of a region going through a prolonged, maybe necessary adjustment, getting back to something more sustainable after that frenzy a few years back.
I think that's right. Broadly speaking, sellers are clearly having to adjust to these new realities. We see it in the price drops. But buyer sentiment is still cautious. They're likely waiting for maybe more price relief or clearer signals on the economy, especially interest rates.
Makes sense.
And the Austin housing forecast, based on current trends and historical data, points towards a multi-year recovery just to get back to those peak values. It really underscores this shift from a super fast appreciation cycle to a much more measured, extended return. It's definitely a period of recalibration for the Austin housing market.
So as you navigate this current Austin housing landscape, here's something to think about. How might these extended market corrections influence the fundamental long-term appeal of Austin as a real estate investment, especially when you weigh it against its strong historical appreciation rate and, its continued population growth? It's that question of balancing today's challenges with those enduring strengths.
A very relevant question for anyone thinking long-term here.
Well, that's it for this deep dive into the Austin housing market by Team Price Real Estate. We really hope this has given you the essential insights you need to feel well-informed about today's market conditions.
I hope it was helpful.
We'll be back soon with another deep dive.